Bad credit is not a death sentence. It's if you do nothing about it whatsoever, it's a 7 to 10 year hiccup. If you can at least take some of my advice, it's a short little speed bump, if you will.
Welcome to the Bulletproof Cashflow podcast. Let's get into the show.
Hey everyone, it's Agostino. Most of everything in your life is based around your credit score. Now, there aren't many who teach how to have a great credit score or even how to restore your credit after a major life change like a divorce or some other major thing that might have happened to you in your life. But today's guest understands all this. Now, he's been involved in the credit repair industry for well over a decade, and he's considered to be one of the foremost experts in the U.S. when it comes to this very subject. Now, today, he is a renowned financial expert and celebrity wealth coach. He helps people increase their income, reduce and consolidate debt, and radically improve their credit score. Now, additionally, he's the host of The School for Wealth, a podcast that teaches people how to be more emotionally, physically, and financially wealthy. Now, with all that, I'd like to welcome Rondi Lambeth to the show. Rondi, my friend, thanks for coming on, man.
Hey, you bet. Thanks for having me on today. It's a beautiful day to be alive, isn't it?
Every day is a beautiful day to be alive. Any day you're 6 feet above ground, you're okay. So
absolutely, there's nothing to complain about if you're above the ground.
That's right. That's right. Now, guys, if you like what Rondi has to say, you can reach him via his contact page at fortresscreditpro.com. Okay, Rondi, go ahead and tell listeners a little bit more about how you got started. How'd you get into all this credit stuff?
Yeah, it really got started when I was young. I grew up not too far from where I'm at now, where I live now in Boise, Idaho. I grew up in a little farming town called Parma, Idaho. And I grew up in a shack. It literally was someone's storage shed that they hauled off to the property that we lived on. Had no running water, no electricity. We got our food out of the dumpster every Wednesday because on Tuesdays they recycled everything to the trash can. So after school, we'd go there. And so I grew up really poor, and I grew up being taught money was the root of all evil. Rich people are evil, and the government's out to get you. And with that, the emotional abuse, the psychological, and then the physical abuse, I just decided I was tired of being beat up and being tortured. So at 15 years old, the oldest out of 11 siblings, left home. And I went to work for a multimillionaire that owned a funeral home as well as other businesses in a little town in John Day, Oregon. And his name was Wally Williams. And Wally started teaching me about money, teaching me about credit, which there wasn't a lot of credit back then. This was 1986. And he started teaching me about taxes. And one of the things that he taught me was something I say on a regular basis, including today on Instagram. I had posted a video, and it was, how much money you make is not as important as how much money you keep. And so while all my peers, here I'm 15 years old, they're running around partying and playing, which I did my fair share of partying as well. But when they were focused on sports and what was going on, I was focused on learning how investments work and learning how taxes work. And so that was my journey into this world of finance. And at 18 years old, senior year in high school, I bought my first house. Yes, it was only a 42-foot single wide trailer. And I remember the first day I went to school, I was bragging about it and I was so proud of it. And I remember some rich kid, which I would classify then rich. Now, I wouldn't even consider them having any money at all. But back in that day, being a poor kid, I thought they were rich, and the rich kids were making fun of me saying you live in the trailer. And my response was, well, you still live with mom, so at least I got something. And fast forward, I went to work shortly after that. I become a fireman, and I was on the busiest rescue in Denver, Colorado for a fire department called Littleton Fire. Most people that have followed the news over the last 25 years or so have seen Littleton fire trucks. We were the first responders to the Columbine High School shooting. I was actually the third firefighter on scene at the Columbine High School shooting. And the reason I bring that up is I started seeing people at that point were getting stressed out about money. And we see almost 50,000 people a year commit suicide over money problems. It's the number one cause of divorce. And it all, I think, stems back to where we're not taught anything about money. Our education system will teach us about sex ed and why being transgender is okay and why we should encourage that, but nothing about money, nothing about credit, and nothing about taxes. And what I started seeing as a firefighter on these calls was people's emotional attachment, if you will, to the money, and how they're willing to take their families' lives and their own lives over money. Fast forward 2006, my little brother, who was also a firefighter, ended up shooting and killing himself over some money problems, some credit problems. And because of that, I started digging into the whole suicide thing and money and credit. And I started a credit repair company in 2007. And it was never to make any money. It was literally just to help people. And then I started getting pretty good at it. And then it turned into a 9-figure a year business. And now it's doing really well 14 years later. So that was the long story of how I got involved with credit. Thanks for bearing with me on that. Hopefully I didn't put anybody to sleep.
No, hey, that's a hell of a story, man. That's a hell of a story, and and you're absolutely right though. That I've heard those stats before, that for people, families, and couples, that once money becomes an issue, they end up splitting. That's why that's what I did anyway. I focused on fixing the money scenario, and it helped certainly building our strong relationship here at home. So there's absolute truth in that. But for some that don't, they're not able to because the credit issues that they've encountered, right? And a lot of people go through divorce, and they have, maybe their wife wiped them out or their husband cleaned them out and took all the money and took all the kids and took everything, and now here somebody has to start all over again. What sort of things are they to do? Like, what sort of things do you typically prescribe for someone in such a scenario?
Number one, and this is probably the most important thing I can say, bad credit is not a death sentence. It's if you do nothing about it whatsoever, it's a 7 to 10 year hiccup. If you can at least take some of my advice, it's a short little speed bump, if you will. So that's number one, is bad credit's not a lifelong sentence. We can fix it. I fix bankruptcies in little as 21 days. Charge-offs, short sales, collections, repos, late payments. There's absolutely nothing. Again, there's nothing on a credit report that can't be removed from a credit report. Think of a credit report like a clothesline. I don't know if you ever remember those as a kid or have seen those, where you got a wire, right? And you hang the clothes on it. I remember where I grew up in Parma, Idaho, it got super cold in the winter, and we'd wash our one pair of pants, and then we'd hang them, and then they'd be frozen. And then we'd have to break them apart and wear these frozen pants, but it would literally freeze the water out. But imagine this clothesline. And if you hang something on the clothesline, it will be there until it eventually falls off. Same thing goes with credit reporting. When a furnisher, like a bank or a collection company, furnishes the data to the credit reporting agencies, otherwise known as a credit bureau, that information will be there. If it's negative information, it'll be there 7 to 10 years. If it's positive information, it could be there 20 years once the account's closed. So like a mortgage, 30-year mortgage, if you stayed in that house for 30 years, would report essentially for 50 years. But bad credit can only report for 7 to 10 years. What my company has specialized in over the last 14 years, and what we've helped hundreds of thousands of people do, is we go in and look at the credit report, note all of the mistakes in the way it's being reported, and then exploit the mistakes. And because there are mistakes in the way it's being reported, the furnisher and the credit bureau by law is required to remove that account or correct it. The problem is they don't know what's the bank doesn't know what the credit bureaus are reporting because they can't see the credit report. And when they enter the data, it's all just ones and zeros. It's not like they click a button 30 days late, 60 days late, charge off, settlement. It's ones and zeros. And sometimes it gets entered in wrong. And also, their systems are not up to date. And so one will report something, and the other person, the furnisher will report one item or one way. The credit bureau receives it and interprets it as another way. And so they report as a 30-day late, it shows up as a 60-day late. And there's little mistakes like that. And so what we do is we look at the credit report, we find the mistakes, we dispute the mistake, and then we demand to be deleted. And then the credit bureaus and the banks, the furnishers, collection companies delete the item. So to answer your question, long story would be, one, your negative credit history is not permanent. It's not a life sentence. It's just a short-term hiccup, and you can hire someone like me. You can do it on your own. You can get it fixed. If you don't have the money, you can do it yourself. If you have a little bit of money, we'll do it for you and finance it for you.
Yeah, and I think that's one of those things though too. It's like one thing I know about in that industry. I spent a little bit of time in the credit repair side a long time ago, and I used to work in credit and collections a while ago too. To try to do this on your own, you have to. I mean, you really have to stay on top of it. And I'm not just saying it because Rondi's on here, guys. It's more like it's one of those scenarios that this is something that requires attention, and you have to have someone that has eyes on it all the time to see it all the way through, because you can easily miss deadlines, not send them the right information that they're looking for, or even challenge it incorrectly. If you do it wrong, you got to start it all over again. It just takes up more time, and you don't want that to happen. That's it's kind of like defeats the purpose, and it keeps you from really achieving your goals, and that is, of course, to go out and buy assets. Because if your credit is shot, it's very hard to build anything. Very hard to build anything.
Yeah, and the number one mistake that I see people doing is they will write a letter, they send it to the bureaus, and they'll say stuff like, "I was never late. This account's not mine." In fact, the credit bureaus will tell you that over 70% of the letters that they receive every single day, which is 42,000 envelopes a day, 70% of them are from credit repair companies, and that 90% of the letters, the dispute will be account not mine. And it's code. When they'll see that in there, the OCR machine, optical character recognition, scans it, sends a code to the Philippines or Brazil. That person at the other end has no access to the internet, no access to email, no access to phones. They're required to do a reasonable investigation on whether or not it's the client's account or not, because it's 001, that's the code, not mine. And within a few seconds, they'll click verified. And there is no reasonable investigation. And so by writing in, it's not mine, it does a couple things. If you're doing it yourself, you've just red flagged it, and now they can legally ignore you from that point forward, because you've sent a frivolous letter, because it is your account. Now, if it's identity theft, you're still going to get tagged as frivolous, which is why it takes an average of 2,000 hours to fix identity theft on your own. But if it's a credit repair company that does this, what that ensures for that monthly credit repair company is now they're going to get another 8 to maybe 12 months of you paying that $100 a month as they keep sending the same letter. Not mine, not mine, not mine, not mine. And then the bureau simply, they flag that account. They don't even do an investigation. It literally just goes into the trash can. And so, yes, you can fix it on your own, but how do you respond? How do you write the letter? Another thing that people have a hard time with is when they get back the suspicious letter response from the bureaus. And it says something like, "Dear Mr. Lambeth, we received your letter on such and such date, and we have determined that it was not sent by you, and it's suspicious, and we've turned it over to the authorities." What do you as a consumer do? You sent it. You're like, did I screw up? Did I break the law? The average American commits 4 felonies every day, and they don't even know it. Did I just commit some felony? Am I going to go to jail now? Is the authorities going to show up and knock on my door? And so it scares the hell out of them. So they stop. And we don't really get that many of these. Maybe out of every 10,000 letters that we send out, we'll get one. And it's really simple to respond to, but the average consumer is not going to know how.
Right. And the thing is, though, is that there's so much tied to credit. Aside from, your just the acquisition of assets, which the majority of our listeners, is what they're doing. But even your insurance is tied to credit, right? The amount you're going to pay on insurance, the store cards, things like that, even the offers you might get that come in when they start doing soft pulls on your credit report, right? And even the if you do a refi, the better your score, the better rate you're going to get. And again, people don't realize that kind of stuff. And to have that great credit is certainly going to help. And there is, I guess the point is, there is help out there for you if you don't want to handle it yourself. And I mean, I'm one of those guys that would never handle it myself. I would do the same thing that many people do. They go to the internet. Hey, you don't need one of those credit repair companies. Here's a form letter. You fill it out, put a stamp on it, and send it in. And it's like, well, it takes a little more than that. It takes a little more effort than that. It's.
You know what's crazy about that? I want to interrupt you here because this is important for people to know. That form letter, do you think it just happened to show up somewhere online, that it was just some good random person uploaded, like I uploaded the letter because I wanted to help people out and give back? No, the credit bureaus created the letters and they created the websites and they uploaded the letters for you to download. No, why would a credit bureau do that? Why would Experian create all these letters and create all of these websites for free credit repair for Joe Schmo, the consumer? Because they know that consumer didn't do much research, is uneducated, is ignorant to the Fair Credit Report Act. Not an ignorant person, but ignorant to the Fair Credit Report Act. And they know they can take advantage of that consumer. So when you print out that letter and you fill it out, when that goes through the OCR machine, it knows where you got the letter. So they know who you are and they just delete it. They'll stamp it as frivolous and they'll send you the suspicious frivolous letter. So don't ever download anything offline, or don't download anything online and use it. You can look at the letters and you can write your own, but never use anything that you see online. Yeah. Here's another thing for you. You said it, and I'm glad, and I can tell that you actually know something about credit because you talked about insurance. People don't realize that car insurance companies pull your credit twice a year, and how much you pay each month or yearly with your insurance premium is a direct result of your credit score. And here's why. People with low credit scores have a higher likelihood of committing insurance fraud. Also, higher likelihood of having a claim. Why? Because they're not sleeping. They're getting bombarded at work. They got collection companies calling them all day long. They're stressed out. They're fighting with their spouse or their partner. They're drinking too much. They're smoking too much or whatever. And so they're more apt to be in an accident. On the insurance fraud, I witnessed with my own eyes 2 weeks ago a family member committing insurance fraud. I witnessed it. And he wanted me to participate. I'm like, absolutely not. He wanted to use my phone because he didn't have a phone. I'm like, nope, you can't use my phone. You figure out your insurance fraud some other way. And his basis behind this was, well, I need the money. I need the money. My disability check wasn't enough, blah, 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 blah. This lady hit me, but I didn't want to turn it in on her insurance because I didn't want to affect her rate. So I'm just going to insure it. And I haven't filed. His justification was, I need the money. I haven't filed a claim in over 20 years. This money's due to me. So it's okay if I commit fraud. And so that is another reason why insurance companies will pull your credit. And yes, he's got bad credit, right? Because he doesn't pay his bills. And so therefore, he's got a lower credit score, a higher insurance rate. But on top of that, how much you pay for gasoline is impacted by your credit score. How much you pay for a gallon of gas, how much you pay for water, how much you pay for electricity, how much you pay for this energy drink that I'm drinking right now, how much you pay for water, sewer, gas, electricity, Netflix, car insurance, and interest rates. And I'll finish with this on the vehicle expenses. Let's say gasoline's $4 a gallon. And you and I go into the same gas station, and let's call it Chevron, whatever. It's $4 a gallon. You pay with a debit card. How much did you pay per gallon? $4, right? $4. I'm going to pay with my, I don't know, I'll pick my American Express Platinum card, or maybe my Visa Signature card, or maybe one of my MasterCards from American Airlines. I'm going to pay 5% less. So I'm going to pay $3.80 a gallon because I get 5% cash back by using a credit card with good credit. I qualify for the credit card. So I'm paying 5% less than if you paid with cash, check, or debit card. Now, I know what some of the naysayers are thinking. Well, I never heard of someone becoming a millionaire from credit card points. I actually know people that have become millionaires by teaching people how to use credit card points. But I've never met anybody that became a millionaire from the points. But I know lots of millionaires that use credit card points to go on family vacations by pay with their credit card points. So that's another way it costs you more, you know?
Hey, Agostino here, and I would love to connect directly with you. Text the word books to 202-410-4202 to receive weekly book recommendations from me. Yeah. Yeah. Oh no, that strategy. It's funny because most of my friends they use their air miles to fund their family trips and everything else like that. I mean, why not? I mean, it's funny. It's funny. Those naysayers are the ones that will be the first ones to say, "Oh, I can't get rich doing that. No, so I'm not going to bother." It's like you guys don't understand. It's millionaires. They're always looking for streams of income, and that's another form of income, by the way. Just spending your money wisely for those air miles and whatnot, and for those points. Absolutely. It's another stream of income. It's another form of income.
And as of right now, we're fortunate that it's not taxable. So points are not taxable. I'm going to Cozumel in 2 weeks. I'm taking my girlfriend, flying first class, and flying international first class is different than first class in the States. So it's a quite nice experience. And the whole thing's costing me less than $100 cash. The rest is all points. The scuba diving, the airfare, the food, the drinks, $100 cash. The rest is points on business expenses, the things that I bought that I could have paid with a debit card, but I instead chose to use a card that pays me cash back. Yeah.
There you go. There you go. That's one of the things that we prescribe too. And when I'm helping people get into the multifamily world, is when they set up their LLC, get the corporate card and make sure you get the air miles on it too, because they're going to be using that a lot. Yeah. Now, when it comes to credit, there is something else that I've heard recently, and that is that some of these bureaus, I think all the bureaus now, they're not reporting like public record stuff, like IRS liens and stuff like that. I guess LexisNexis is not reporting that stuff. Have you heard about that kind of thing? And what sort of remedy do you have on that?
Yeah. So all of that was part of a lawsuit settlement. All 50 state attorney generals sued the credit bureaus over reporting inaccurate public records, including tax liens and public records, judgments, etc. And the problem was they were reporting this information with no investigation and no proof, and not even checking to see if the Social Security number even matched. So if someone had a similar name to you and they had a tax lien, it could show up on your credit report. Or someone that you knew, or someone who lived in the same house that you used to live in, that would show up on your credit as a open judgment or tax lien. And so all 50 AGs sued them. In July 1st, 2017, they reached a settlement and they said, hey, for the next 12 months, we will not report public records until we figure out how to do it accurately. And so a year came and went. And you would think, since the Fair Credit Report Act was created in 1970, here we are in 2021, you would think in 51 years they would figure out how to report it accurately, which they don't, because there's too much money in reporting it accurately, or too much money rather in reporting inaccurately. Because another thing that people don't realize, of those 42,000 letters the credit bureaus receive every day from credit repair companies disputing it and consumers, they charge the furnishers per dispute. anywhere from 25 cents all the way up to $5.75 per dispute. So when my company goes and disputes 100 items on your credit report, they can make $500 a month off of that by charging Bank of America for that dispute because they got to handle it. And so there's a lot of money in inaccurate reporting. So back to the public record thing. So they reached agreement. They paid a whole bunch of money, and the states kept all that money. And then they agreed not to report public records. That has since expired. And there was word that they were going to start reporting again in 2020. And one of the things I say on a regular basis now is due to COVID, this has changed. And so due to COVID, they've agreed or decided not to report this year, but tax liens are coming back, and so are public records. They're eventually going to come back. And the way they used to get it before was LexisNexis, or they would send in a college intern into the courthouse. The college intern would literally take pictures or make photocopies and then scan it in, upload it to the credit bureau's database with no verification of who it was. And it was simply on a name and an address. And so that's how this whole lawsuit got started. But as of right now, they don't report. However, that doesn't mean it doesn't exist. It's there. It's just not on your consumer disclosure form, which is what we call a credit report. The legal name is actually consumer disclosure. It's on that consumer disclosure report. And it's not there, but it is on your LexisNexis report. It's going to be in public record reports and some other places.
Okay. Now, do you fight LexisNexis for inaccurate information that might be on there too?
Absolutely. In fact, for my business clients, I have a business credit course where we teach business owners how to get unlimited funding without using a social security number. First thing that we teach them is we got to go in and clean up your LexisNexis, because that is where banks go when they pull credit for businesses. They go to Dun & Bradstreet and they go to LexisNexis. They don't go to Experian, Equifax, and TransUnion until later on. And the reason for that is 85% of banks, 85% do not report to the credit bureaus. So if you go to Wells Fargo and you get a business credit card, there's a high likelihood it's not going to get reported to Equifax, TransUnion, or Experian. It will get reported to Dun & Bradstreet and it will go to LexisNexis, but not the three bureaus. And so banks know that other banks don't report, so they don't even pull those bureaus. So that's the first thing that we teach our business owners is we got to clean up LexisNexis and we got to clean up Dun & Bradstreet.
Right. And that part's huge too. That part is absolutely huge because, again, one of the things that as an entrepreneur, that you're out there trying to build your business, if you can keep these transactions that you're doing, like say you're doing a rehab on a house or an apartment or whatever, and you're floating everything with your personal credit, well, it's going to impact your personal credit score. But if you're able to use it on the corporate side, it won't impact your personal credit score, but you're going to have to get a corporate card and under your company's name. Getting that set up from when you're at zero, it's going to be a little tougher to do, but I guess you're out there to help people really get that business line of credit, because that part is especially elusive for people who have never done it before, right?
Yeah, and it's elusive because it's the opposite of personal credit. Personal credit doesn't make sense in the eyes of the consumer. It makes perfect sense for FICO, for the credit bureaus and the bank. But business credit is almost the opposite. For example, with business credit, if you max out a credit card, personal credit, your score will tank. Anytime you go over 10% utilization rate, you're going to lose about 10 points. You could lose 100 points by maxing out one credit card, regardless if it's a $1,000 credit limit or $1 million credit limit. Business credit, if you max out a credit card, your score goes up. The more credit cards you have, the higher your score goes up. The more inquiries you have with business credit, the higher your score goes. And so it's the opposite of personal credit. And then on top of that, remember 85% of banks don't report. And there is no Fair Credit Report Act for business credit. It's the Wild Wild West. They can get away with anything they want. They can discriminate against you for any reason they want because there is no Fair Credit Report Act. But not only is it opposite, a lot of it, you have to do it in a specific order. So with personal credit, you get a credit card, student loans, a mortgage, car loans, or any combination of that in any order, and you can have a great credit score. With business credit, you have to do this type of credit, and then this type of credit, and then number 3, and then we have 5 levels. So you got to do level 1, level 2, number 3. And most people want to go to level 5. The problem is you'll get denied every single time if you skip steps 1 through 4, because almost 90% of all applications submitted to the bank is fraud. And so if you forget to put a period, you forget to cross a T, you don't capitalize the ink in your name, or use a Gmail for an email address, or use a cell phone for the business number, you get denied. Because with business credit, I could go in right now and I could pull your business credit. I pay $35 to Experian or Dun Bradstreet. Nothing you can do to stop that. I could pull Walmart's right now. I could pull Apple's. You could pull my business credit at any time. And so what happens are thieves will go and they'll see you. They see you on a podcast or YouTube. So they're like, hey, I bet we can steal his identity, which there's no such thing as stealing identity, but they can commit some fraud and apply for some credit cards. And they simply will pull your business credit report, add a new PO box, start applying for business credit cards, have it shipped to the PO box. Because you never looked at your business credit, you didn't even know. They rack up these cards, they make the minimum payments for a couple years or a couple months, max them out, and then charge it off. The next thing you know, you get a call and you got a couple $100,000 of debt in your business that you didn't know about. And so it's just another reason why it's difficult to build business credit.
Wow. But fortunately, you're there to help on that stuff as well, right?
Yeah, we teach them step by step how to improve their personal credit and what they can do. Because, 65% of your credit score is based on what you do. 35% is based on payment history of what I can do. And so we spend a lot of time educating our clients how to use a credit card, why you should never pay off a car loan early or a student loan early, and why student loans are like the greatest thing you can have on your credit report outside of a mortgage, and still even better than a mortgage because of some of the things you can do with it. So we teach them how to do it, and then we do it on the business credit side as well.
Right. Now, in the green room, we're catching up. You'd mentioned you have some other things that you do to really help people really get on solid ground when it comes to rebuilding their life. Especially, we talked a lot about credit, which is huge. What sort of other tools do you have in your toolbox there to really help somebody really get back on their feet?
Yeah, Fortress University, we have 25 different courses. Some of them are, how to create a financial plan. Some people call that a budget. I don't like calling it a budget. It's a financial plan. How to decrease 50% of your tax burden. I personally have paid a very, very small amount of personal income tax over the last 20 years. And part of it is because I have 4,200 doors and I have millions of dollars of depreciation, which your listeners should understand that with cost segregation and rapid depreciation and other things. But I teach normal people that don't have apartment complexes, that make 50, 60 grand in a W-2 job, how they can eliminate 100% of their tax burdens and legally do it by just simply understanding how tax code works. We teach them how to manage the credit cards, how to apply for a credit card, how to pay off a 30-year mortgage in 7 to 10 years without changing their lifestyle. And you can apply that to anything. I've done it with my airplane loan. I've done it with my Ferrari. I'm doing it now with several of my apartment complexes where we're literally eliminating 70% of the interest the banks charge us by simply changing where our rent is deposited. And by changing where the rent is deposited, it makes it to where we're only paying interest on that loan for 5 days a month instead of 30 days a month. So these are just some of the courses that we teach at Fortress University.
Wow. That's powerful stuff right there. Very powerful stuff. And That's one thing that I've actually used some of those tools myself, just in what we own. Yeah, I mean, I've personally paid little to very little income tax, if at all. It's just remarkable, the power of multifamily, the accelerated depreciation, all that fun stuff is just a beautiful thing. Beautiful thing.
And there's things like I did a post today on Instagram, and it was, how you can eliminate $5,500 roughly of income tax per kid that you have. And because the IRS allows us to pay each child under the age 18 $13,000 a year to help out around the business, whether it's emptying the trash, shredding the paper, maybe mopping, doing the dishes at the office, whatever it is, vacuuming, helping with the flyers. That's $13,000 per child that the business gets the write-off, that the child doesn't have to pay taxes on. And then once they get out of high school and they go to college, it gets even better. You can pay them up to $33,000 a year. So it's crazy. All these families running around saving all this money in 529 plans, which disqualify for their child from qualifying for a grant or a scholarship, because that money's designated for people who didn't plan for college. And all they had to do was start a small business, and now they can take $33,000 a year out of the business, give it to the child then pays for the college, and it's all tax-free. So it's just, I love doing stuff like that. It's so much fun.
And the funny thing is, it doesn't even have to be complicated. I mean, you can literally set up an LLC, like you do it online. Anybody can do this. And if you really wanted to, you can set up the LLC, you put money into this LLC bank account and have it pay your kid. I mean, to do chores around the house, as you said, that's perfect and all tax free. And you're basically putting money aside for that child, as opposed to using a 529 or whatever other tools that they have out there. Yeah, it's beautiful, beautiful plan.
The key to that is the LLC, the business, has to be an intention of making money. And in order for you to get that deduction, you have to make at least $1. And that's why when you go to these restaurants, generally you see it at restaurants or small businesses, you'll see like our first dollar. It's not just to have a picture of it. It's actually required by law to register when you make your first dollar, whether it's on a tax return or a picture on the wall. That's your first dollar. Therefore, you're a real business, and now you can write things off. And again, I'm not a tax professional, so you need to talk to your tax professional on that. But just you and I talking.
No, that's right. But you know what though? That what you just said though, just for that alone, that program, I heard of this one, and it's absolutely beautiful, and people need to be doing this kind of thing. But again, I think what it comes down to is just a lack of education. Just like you said when you opened up earlier, it's kind of like, where everyone's so focused on the news and whatever garbage that the media is pushing out there now more than ever. We're talking about that as opposed to what really matters, and that is just fixing your personal income and to focus on building your business. So there's less of that, but that's why we do this show, right? That's why we do this show. So Rondi, what sort of bulletproof advice would you offer to someone who's listening right now? Like maybe they're at an impasse, they're not sure what to do. Maybe they're listening. They click this link because maybe they are having credit issues. What would you recommend for them?
I would say that managing your credit cards is the most important thing that you can do for your credit score. And what I find that most business owners and entrepreneurs do wrong is they're using personal credit to fund the business, or they're using personal credit to pay for Facebook advertising or whatever it is. And then that shows up on their personal credit report. And because it's overutilized, over 10%, and what I mean by that is $10,000 credit limit, they spent more than $1,000, so that's over 10% utilization, score goes down. So the number one thing that people can do is to manage that credit card properly. And if you haven't established business credit yet, and you're using personal credit, I'd recommend that you start building your business credit. But at the same time, if you pay off your credit cards in full by the statement date, then it won't report maxed out. So let me break that down. When you get that statement in the mail, it's going to have a statement date and then a due date. The due date is when you have to pay off the balance to avoid paying interest. The statement date or closing date is when they close that cycle. And then there's generally 2 weeks in between the statement date and the due date. If you can pay your balance by the statement date, then what happens is the no balance is then reported to the credit bureaus. For example, if you're with Capital One and the statement date is the 15th and the due date is the following month on the 1st, if you max it out and you pay it off between the 16th and the 1st of the month, the credit bureaus don't know you paid off the credit card because they report the balance as of the statement date on the 15th. And so I will meet with people. And earlier this week, I talked to former President Donald Trump's doctor, and I was looking over his credit report. And I said, Doc, the reason you have this credit score is because all of your credit cards are maxed out. And you know what his response to me was? I pay him off in full every month. He pays them off in full by the due date. The problem is they're reporting on the statement date, and then he waits 2 weeks like all of us do, and he pays it by the due date. And so FICO doesn't know. So what you can do if you're a business owner doing it the wrong way by paying it by the due date is simply pay it a little bit early. Pay it by the statement date, and by paying by the statement date, that no balance will show up, and then your score will go up.
Wow. That's gold right there. That is gold right there. Now, I know you have a bunch of other materials on your website too, right? That all kinds of downloads and stuff like that.
I do. If you go to rondilambeth.com, that's rondilambeth.com. There's tons of information there. You had mentioned fortresscreditpro.com. That's my business for the credit repair side. But on the Rondi Lambeth side, it does the business credit. It does personal credit, taxes, coaching, speaking engagements, etc. Also has a link to my podcast. But rondilambeth.com. Any of your listeners that go there, I have a free book called Credit Hacks, How to Increase Your Credit Score. And it'll break it down, 23 different things that you can do, 23 easy things you can do to increase your credit score, like take Netflix and put on that old credit card that you haven't used for years. That literally can boost your credit score 50 to 60 points by just simply taking Netflix from your debit card and putting it on an old Citi card that you haven't used in a couple of years. So things like that, little hacks like that can increase your credit score. But again, rondilambeth.com.
Nice. Excellent. We'll include a link in the description. All right, guys. Now, if you want to reach out to Lon, just like you said, you can reach out at his website, or of course, fortresscreditpro.com is another one as well. You can reach out there. Hope you got some insight on how you can really get your credit fixed and get it in tune. And of course, start working towards building wealth, right? Because that's why we do this real estate thing. We're looking to build that financial freedom, and having your credit fixed and on solid ground is one of the foundations to making this happen. So thanks for tuning in, guys, and I'll see you in the next episode. Take care.